Think you need a huge pile of cash to start investing? Think again. What if I told you that just $100 could be your ticket to building real wealth? It might sound small, but that $100 is a powerful first step. Imagine planting a tiny seed. With time, water, and sunlight, it grows into a massive tree. Investing works the same way. That initial amount, combined with the magic of compound interest and consistent contributions, can grow into a significant nest egg over time. Don't wait for the perfect moment or a big windfall. The best time to start was yesterday, but the second best time is right now. So take that first step, invest what you can, and watch your financial future begin to blossom. You've got this. Thanks for watching, and don't forget to subscribe for more tips. So you've got $100 and you're ready to start investing. Awesome. But before you even think about where to put that money, let's talk about the single most important thing that will determine your success: your mindset. This is where almost every beginner goes wrong. They see investing as a get-rich-quick scheme, chasing crazy returns and showing off profit screenshots. That's a recipe for disaster. Real investing is boring. It's about patience, consistency, and discipline. If you go into this expecting to triple your money overnight, that $100 will vanish before you know it. We live in an age of information overload. Social media is flooded with so-called gurus promising the next big thing. But true wisdom is rare. The reality is that slow, steady, and frankly unexciting strategies are the ones that build real wealth over time. Think of this first $100 not as your ticket to a new car, but as your tuition for the school of investing. It's here to teach you valuable lessons: how compounding works, how markets fluctuate, and most importantly, how you emotionally handle the ups and downs. Learning to stomach a $10 loss now is infinitely better than learning that same lesson later with $10,000 on the line. This initial investment is about education, not instant riches. Now, let's get practical. Before investing, take a hard look at your overall financial health. Is your foundation stable? I'm not saying you need to be perfectly debt-free with a huge emergency fund, but having some stability is crucial. Ideally, you'd have a small emergency fund tucked away in a savings account. Even just a few $100s can be a massive psychological safety net. It prevents you from being forced to sell your investments at the worst possible moment just to cover an unexpected car repair. A stable foundation gives you the confidence to let your investments grow without panicking. Next, you have to consider your debt, especially high-interest debt like from credit cards. If you're paying 20% interest on a credit card balance, that's a guaranteed loss every single year. It's very difficult for investment returns to consistently outperform that. So, it often makes more sense to aggressively pay down that toxic debt before you start investing heavily. Think of it this way: paying off a 20% interest debt is like getting a guaranteed 20% return on your money. No investment can promise that. However, I understand the desire to just get started. If $100 is what you have and you're committed, it's okay to invest it while simultaneously working on building your savings and paying down debt. The key here is balance, not waiting for the perfect financial situation that may never arrive. Okay, so your mindset is right, and your finances are in a decent spot. How do you actually invest that $100? The key is to keep it simple and diversified. Don't try to find that one magical stock that will make you a millionaire. Instead, I would split the money. The largest portion, say $70 or $80, would go into a broad market index fund or ETF. Think of funds like those that track the S&P 500. This is the simplest, most effective way to achieve instant diversification. With one purchase, you own a tiny slice of hundreds of the largest, most successful companies in the country. You're not betting on a single horse. You're betting on the entire race. This strategy minimizes your risk because if one or two companies have a bad year, it's balanced out by the hundreds of others that are doing well. It's the closest thing to a set it and forget it strategy that exists. And it has a proven track record of delivering solid returns over the long term. With the remaining $20 or $30, you can allow yourself a little more targeted exposure. You could put this into a specific sector you believe in, like technology or healthcare, through another ETF. If you've done your research and you're passionate about a specific, financially strong company, you could buy a fractional share of its stock. This smaller portion of your portfolio is your learning zone. It allows you to explore your interests and see how individual stocks or sectors perform, but without risking your entire investment. The most important thing is to avoid penny stocks or speculative bets. Stick with established, profitable companies. This balanced approach gives you the best of both worlds: the stable, long-term growth of the broad market, and a small, manageable space to learn and experiment. Remember, the journey of 1,000 miles begins with a single step, and your $100 investment is a fantastic first step. Thanks for watching, and don't forget to subscribe for more tips. At this point, you should realize that investing with $100 is not about the number itself. It's about the decision behind it. Wealth is rarely built from one big move. It's built from small, boring, repeated actions done consistently over time. If you wait until you feel ready, you'll stay stuck in the same place year after year. Starting with $100 in 2026 is powerful because it turns you from a spectator into a participant. You stop watching the market and start learning from it. You stop guessing and start building discipline. The money may grow slowly at first, and that's okay. Because the real return in the beginning is knowledge, confidence, and habit. What matters most is that you take action, set up a simple system, and stay consistent even when the excitement fades. If this video helped you understand investing in a clearer and more realistic way, make sure to like it and subscribe for more simple finance content. Let me know in the comments what your first investment would be. And remember, you don't need more money to start, you need a plan and the courage to begin.